welcome to Let's Talk Tax, the show for growth-minded CPAs and real estate pros in tax. I'm Jerry Hammel, and in today's episode, we're taking a deeper dive into a new requirement for Form 6765 reporting, and that's Section G. Joining me today is my colleague and shareholder of McGuire Sponsel's R&D Tax Credit Services practice, David Seibel. David, welcome back to the show.
Thanks, Jerry. Thanks for having me.
Yeah, well, David, we recently discussed on an LTT episode really a different type of issue that was facing us, and that was related to 174 amortization. Maybe you can tell me in just a couple bullet points some of the highlights of that conversation.
Yeah, I believe we covered from the last time we covered kind of what the current status was of the 174 bill and not 174, but the big beautiful bill that has a temporary 174 fix in it for the 25 through 29 tax years. And we walked through just kind of what those correction steps would look like for 22 through 24 and some of the options that are available for those taxpayers that maybe didn't comply with 174 amortization, and as well as some examples to help get some strategies to help get them back into the fold for 174.
Yeah, and it was really interesting because I think it's a unique opportunity for those taxpayers that possibly didn't comply in 22, 23, and 24 to begin taking the credit again and not having to amortize the 174 expenses for 25 and forward, and allowing them to really not feel a significant impact in their tax liability by filing the Form 3115 and taking that corrective action. So
exactly, yeah, it really presents a really good opportunity. We talked last time how there's that somewhat modest hit in, I believe it's 2028, but that still gives the taxpayer plenty of time to prepare to be able to handle that.
Today we're not really talking so much about an opportunity, but we're really talking about some additional compliance that becomes effective in 2025, and relating specifically to the Form 6765 and what they call Section G of the form. Can you tell me what is Section G, and let me know, will it impact all taxpayers that are claiming the R&D credit?
Yeah, so Section G was part of a pretty substantial overhaul to the Form 6765, which is the tax form that's used to actually claim the R&D credit. And this change actually started with the 2024 tax year. Some of these additional things that were required to be put onto the 6765. Previously the 6765 for tax years 2023 and beforehand, it was it was a 2-page form, but really high level in terms of calculations of the credit, as well as just a high level overview of the total wages, supplies, contract research, and computer leasing expenses that were being claimed. Nothing related to the projects that were being claimed, the 4-part test, the qualification aspects, nothing like that. It was just simply the 2-page form. And then starting in 2024, there's some additional reporting requirements, as you mentioned, talking a lot about not just the quantification aspects, but the qualification as well as drilling down a little bit more into the detail of the number of business components that are being claimed for the credit, as well as some other additional reporting requirements as well. There was a new section, Section E, that was required for 24 and going forward to be filled out. Again, that required the number of business components, as well as some other things like officer wages, if there were any acquisitions or dispositions. And then, like you said, there was this other section, which was Section G, that really drilled down deeper into the various business components that were being claimed, as well as not only just breaking it down and naming the actual business components and which entity, if it was part of a control group, was being claimed, but also drilling into the detail of allocating the wages, supplies, contract research, and computer leasing per project or per business component that was being claimed, and even to drill into it further, the aspects of the direct support, direct supervision, and also those directly working on the qualified research. So
Ah,
really in-depth, um, really in-depth part of the 6765 that was really a pretty substantial addition compared to what we've seen previously. And as a part of acknowledging that that's going to be a pretty heavy lift for some companies, for all originally filed 2024 returns, Section G was optional. Now, I say originally filed because anybody that is going to be amending the returns for 24 would have to fill out Section G, but anyone that's filing on a originally timely filed return, it's optional. And
okay.
then
Well, that's interesting because that's something that could be missed. So you really can't
Mhm.
go by the tax year. I mean, it's tax year, and then it's also then that's only if there's an amended return filed in 2025 or later, then you're subject to this new Section G reporting.
Correct,
Oh,
yeah.
okay.
And so for 2025 and going forward, it would still be optional for taxpayers that are either electing the payroll tax credit
Hmm.
or taxpayers that have both under 1.5 million in QREs and less than 50 million in gross receipts, uh, average over the previous 3 years. So those companies would still be expected to have that information in the event of an exam, but they're not required to report it on the 6765 in Section G unless, again, they're amending the return. The instructions make that pretty clear that, again, that grace period as well as the optional reporting would only be for those taxpayers that are claiming the credit on that originally timely filed return.
Okay, so it sounds like this is something that has been in the work papers and has been in the approach, but it's been more in the client or the taxpayer's files or our files, and now we're going to
Correct.
have to disclose that. Is that so? Just curious, is that for every project for a taxpayer when they're filling when they're completing the form 6765, or let's say a client has 25 are projects that are qualifying for the credit. Do you
hmm
have to disclose for all 25, or how onerous are they making that?
That's a great question, Jerry. So there are some um, additional stipulations there on Section G where they indicate that you can either report the top 80% of projects that are generating the QREs or the top 50 projects, whichever is less. So if you have a if you have a company that claims 100 projects, they would either have to report the top 50 or maybe there's one or two or three projects that are the bulk of the research and are the top 75% or 80% or 90%. They would just have to report those and then report any additional ones in descending order of QREs until they get to that 80% threshold.
Wow, that seems like a high number of projects that would be pulled in if I mean, so unless you have two or three projects that are generating the 80% of the credit, your cap is 50 projects, a minimum.
Correct. Yeah.
Wow.
So obviously, yeah, it can be pretty onerous, and they only provide a 15 lines on the Section G form, so you have to use multiple sheets if you are over that amount. And yeah, it's just just again to your point, particularly onerous and kind of a heavy lift for a lot of clients.
Yeah, and just I know you talked about some of the items that were required by the project, and maybe we could cover those again briefly, but and I certainly don't want to walk people through the 6765 form itself. That's not very
hmm
exciting, but in
Exactly.
terms of the column or format for each project, are we talking about four columns of information, a dozen? I mean, what, just to give people a feel for just how specific and how detail oriented this is.
Yeah, I mean, it's about, I would guesstimate around 10 columns. Actually,
Okay.
probably actually more along the lines of 13 or 14, so about a dozen. Again, that's for each project. So if you're looking at at a grid and you have those 50 projects, that's a lot of information that needs to be entered and keyed in for either for the taxpayer themselves or their CPA.
Yeah, that seems like a lot of work. And there's no, is there any type of exemption or for taxpayers if the credit is below a certain amount or anything, or is this all taxpayers claiming the credit are subject to this new rule?
It's all taxpayers, again, unless they hit those thresholds that where they have not necessarily even the value of the credit, but it's that 1.5 million in QREs. If they're below that limit, as well as the $50 million in gross receipts limit, they don't have to fill out this part. It's optional. But again, it's very clear that they still have to maintain this information because it's in the event of an exam, that would be probably the first item of information in that IDR that they're requesting is that information related to Section G and that breakdown of QREs by project.
Okay. Okay. Wow. Seems like a significant amount of work is going to be required more so this year than for the 2025 tax year than in the past.
Hmm.
Even though you're doing that at that level, you still have to get it in the form and you still have to get that completed for each client then.
Yeah, so obviously if you're talking about a CPA firm, that's going to be a pretty heavy lift, especially if there's no type of automation or anything that can be used in accounting software to pull that information in that would be readily available. I know that we've been actively working with some accounting software companies to try
Hmm.
to figure out if there's a good way to automate that process because currently we're providing a lot of that information to our CPAs and to our clients. The last thing we want them to do is duplicate that work to have to rekey in all of that information because that not only increases the amount of time that they have to then put toward this reporting requirement, but also just increases the likelihood of miskeys or errors and just causes some frustration, especially when you're trying to complete so many of these during the thick of tax season.
Sure, absolutely. So maybe for those that don't know, in the past, prior to this requirement, we were providing them a PDF of the completed 6765, which
Correct.
now, if we did that in PDF format, if it's 50 projects and there's only 15 lines in section G, you're looking at least 3 to 4 pages just for section G.
Correct. Yeah, and then who knows how long it would take someone to be able to key in that information, and that's again just for one client, and
Yeah.
uh, that's a lot of time just for a reporting requirement that it's just again just onerous for those CPA firms trying to be able to input that information.
Yeah, it certainly is. And I know I was fortunate enough to be able to join a call where it was with CCH Access
Hmm.
talking about that specific section. And I know your team's working behind the scenes with their IT group at CCH to really develop an import function within the tax
Hmm.
software. And then I think your plan then is to have your group, when we're doing that work by project, actually house that in Excel, which then it could be easily imported into that section within the tax software.
Exactly. Yeah. Our main goal in that is to make things as efficient as possible. We want our end product to be able to be seamlessly integrated with that accounting software. So again, people just have to click import. That information is populated in their software. They can maybe glance over it once just to make sure everything has been imported properly, and then they're off to the next. They're off
Yeah.
to the next client because we know from our personal experience and just trying out some of these section Gs, filling them out, it takes a substantial amount of time.
Hmm.
And we deal with the 67, 65 every day. So someone, an accountant, a CPA who's maybe not as familiar, it's going to take up even more time for them to try to key that in. So again, as much as we can take the lift and take that burden off of the CPAs, we want to do that. We want to make their lives as easy as possible.
Yeah, that's a great point, David. I think when we approach services for CPA firms and for their clients, obviously the CPAs are heavily involved because it's going into
Hmm.
the tax return that they're preparing and signing. And I know we talk within our shop of white glove care, being the standard in the industry, and that certainly lines up well with our mission of making these services turnkey and not putting not putting a lot of burden on the CPA firm in preparing the return and incorporating our cost segregation study, or in this
Hmm.
case, an R&D credit form into the tax return, because our goal isn't necessarily to educate them to be experts in R&D credit and the 6765.
Right.
Our goal is, as you said, they're busy in tax season. They're up against a due date. They just want to get this input in their return as soon as possible and make it as easy as possible. Yeah.
Hmm.
Well, Sly, I'm really glad to hear that your team is exploring ways to make that effective and efficient for our CPA firms to incorporate this information into that imported section of Section G within the tax software. I
Hmm.
know our firm is really prides itself on white glove service and being the standard in the industry. So I really appreciate your team coming up with that solution so that there's not a lot of heavy lifting on the part of the CPAs.
Yeah, and we're obviously going through iteration one right now. Obviously, our goal is to make it as efficient as possible. So, you know, even when we do have the first one ready to go, we're still considering not considering that the final product. We want to continue to iterate it until we get it to it. It's absolutely seamless. Again, the CPA, all they have to do is click that import button and things are ready to go. So we're confident we're going to get there. And again, it's going to take a little bit of lifting on our part, but to your point, we pride ourselves on that white glove service. We want to make sure those items are as efficient for the CPA as possible.
Yeah, yep, I agree, and I appreciate your team's work on that. Got a question for you. So let's say,
Hmm.
obviously, you're very experienced within the R&T credit world, and have been
Hmm.
doing this for I want to say over a decade.
It
Uh,
has been, yeah.
you don't look that old, but it's been over a decade. Um, but for those that aren't that familiar and maybe think they can do this on their own, or want to just jump into that um, into that into that world of preparing the Form 6765, do you have any warnings or tips or things and just general thoughts based on your experience about maybe how the IRS may change their audit standards or how they may approach enforcement when it comes to this change?
Yeah, I mean, any person that's thinking about possibly doing this on their own, or any client that maybe, when we talked about last week, where clients may be surprised at the new reporting requirements, they should start now. They should start thinking about what are some of the things that they possibly need to document to be able to comply and know, all right, what are the business components that are being developed? How much time did everybody spend on wages? How much of their time went to the projects, not just on the uh, directly working on it, but also the directly technically supporting and supervising, as well as thinking through how are we ultimately going to tag these supplies and contract research and computer leasing costs by project. So when you start to think through it that way, and there might be, again, to your point, some taxpayers who think that, well, we can just do this ourselves. You got to start thinking about all those variables I just listed off. If how do you ultimately start? It makes sense for you to consult a professional so that we can at least help you think through the things, get things started quicker, get things done in a more efficient manner than perhaps if you're just starting from scratch and you're just starting by reading the 6765 instructions as well as the tax code, because all of our clients are not in the business of doing the research and development tax credit. We want them to be able to focus on their business, focus on the things that matter to make them money, and rely on us to be able to consult and make sure that they're in compliance and able to comply with these reporting requirements as efficiently as possible. So again, my main message there would be, it's they can be feel free to do it themselves, but in this instance, it would be really good to consult with a professional, just so again they're not starting from scratch and they have that solid base of knowledge to work from.
Yeah, I
Rely on
think
our
that's
experience.
Yeah, I think that's sound advice, because if someone, let's say they are self-claiming or self-reporting this and they're not familiar with these new requirements,
Hmm.
I've got to believe that if they're caught off guard, they're going to be trying, once they open up the form this year, they're going to be working backwards. And they're going to be way behind, and being prepared and ready to actually complete that return properly in that form.
Hmm.
Um, what are your thoughts about, one thing that comes to my mind with my compliance background experience is just anytime there's a change, it always seems like it's an opportunity for the IRS to maybe up their scrutiny level. What, have you heard anything about that at all, or do you have an opinion on that?
Well, I would say that probably this is a direct result of some of the compliance issues that we've seen. We look at any of the exams that we've seen recently, and it ultimately comes down to they're requesting the information that's on that Section G form. What are the business components? What were the wages, supplies, contract research being claimed? What were the activities being performed? What type of business component is it? So, this form is just almost like the start of an IDR. So, again, any taxpayer that's hoping to go through this on their own, it could be a bit more difficult to walk through all this information to be able to report it appropriately. We know that there's been the cuts at the IRS, and they've been looking more into AI. So, if they're running this information, if they're running Section G through AI and things are not filled out appropriately, that's going to be an automatic flag for an actual person to maybe take a look at it, or maybe there's some sort of AI score that it generates that says that this is a probable case to look at. So it just makes more sense again to consult a professional to make sure that it's filled out correctly,
Yeah.
to reduce the chances of there being an exam or anybody at the IRS trying to question what's ultimately on the form.
Yeah, and maybe you touched upon this in and out, and I think it may be a little bit implied, but in the past, with our R&D credit studies, for example, we offer audit protection, and
Hmm.
and one of the big reasons why we do that is that the four-part test and qualifying a project is fairly technical and fairly complicated. And prior to
Correct.
Section G, this information was in our work papers. And so when we
Hmm.
handled the examination, we controlled the narrative. And now what you're telling me as I think about this more and more from our conversation today, that's going to be just given to the IRS in Section G. And so they're going to
Right.
be able to do a lot of work on a taxpayer and specific projects in terms of preparing, do they think that meets the four-part test, and then use that potentially to determine which clients to audit and examine.
Yeah. And that's
Yeah.
a very good point, Jerry, too. Also, you know, we've seen a lot of claims where we were not the provider. We maybe were being consulted at the last minute for an exam, and we looked through the information that was provided, and some of it was very apparent that either it didn't meet the four-part test, should have never been submitted, or the other case where they didn't know the lingo. The taxpayer didn't know the lingo. So some of the things that are related to the research credit that are excluded, like funded research or anything like
Right.
that, they might think funded research is, oh, a customer paid for it. That's all they think about. And so they say, oh, yeah, this was funded. And so it sinks the opportunity. By the time we're already there, we have to back up and say, no, 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 that's not what this actually means. Like, what
Mm.
it's not actually funded. So again, looking through this new information that's being reported, it's very important that Section G is filled out appropriately so that in the event of an exam, there's not information on there that sinks the claim before you even get started from an exam standpoint.
Exactly, or put you in a bad position, and yet then you have to kind of talk your way back and correct maybe some of the terminology or buzzwords that the IRS will interpret the wrong way. You
Exactly.
guys, with your vast experience and with the team's vast experience, which buzzwords are kind of a no-no, that the IRS will
Hmm.
maybe misinterpret. And fortunately, in the past, we were able to handle that narrative and that conversation, where now it's going to be presented with the tax return. And so I could see a lot of examinations being triggered that just by maybe poor wording. And so that's an area that I think taxpayers are going to want to be very cautious and are going to want to lean into a team such as yours that has all the experience over this number of years, within just this form and within this tax code section. So
Hmm.
yeah, very good
Yeah.
point. Okay. Was there anything I didn't ask you, or anything about this new reporting requirement that you think taxpayers should be aware of, or do you think we covered most of it?
I think we covered most of it. Again, I would just specify that for taxpayers that are thinking about claiming the R&D credit, um, or that have claimed the R&D credit and really haven't thought too much about Section G, get started now. To your point before, we don't want taxpayers in early 2026 going back and trying to reconstruct everything. If you haven't started, we're midway through the year right now. A lot easier to go back now over the last 6 months and try to tag things and reconstruct things a bit, and then implement processes going forward that will help capture what you need to capture to efficiently record this information on Section G for the 25 year, and then also making sure that it's a process that the business can follow going into the future, because Section G is here to stay. This is going to be the new normal, and it's something that taxpayers have to have their ducks in a row to be able to comply with going forward.
Yeah. David, one question. I know you don't have a crystal ball, but it
Hmm.
seems like there were some additional requirements in 24, and now Section G was the big one in 25. Is there anything in 26 or 27? Is there another surprise coming?
Yeah, that's a great question. I certainly hope not. I mean, the other prong that I alluded to, funded research, maybe that's something that they harp on going forward. It's something that maybe you have to report on. There's economic risk and substantial rights retained, which are the two prongs of the funded research exclusion. Um, or maybe some of the other exclusions like adaptation or things like that. Again, that's would turn, add even more columns to Section G, but
Yeah.
it's, again, I wouldn't put it past the IRS to put that information in there.
Well, hopefully this big change in 25 is the last one, and we get a reprieve for a few years at least. But well, David, thank you for breaking that down. It's one of those areas where the details really matter, and like you said, there's no time like the present to plan. Don't
Hmm.
wait until November, and you're scrambling
Exactly.
at the end of the year. And so I really appreciate your time today, and I think this is a really important message to get out to our CPA firms and any taxpayers that are listening to our to Let's Talk Tax. But well, to our listeners, I want to thank you for tuning in today. Remember to subscribe to at Let's Talk Tax podcast channel on YouTube so you don't miss future episodes. And what I would tell you, if you'd like to take a deeper dive into R&D credit reporting strategies, or any strategies related to the R&D credit, and especially this new change in Section G, I know our team and David's team is here and
Hmm.
available and ready to spend some time walking you through that and exploring different options. So until the next time, thanks for joining us on Let's Talk Tax. Thank you, David.
Thanks, Jerry.
Thank you for taking time to tune in today. You can subscribe to Let's Talk Tax podcast on YouTube and follow us on Spotify or Apple Podcasts or wherever you listen. In addition, today's show notes and links to more about the episode can be found online at McGuiresponsel.com. We'll see you next week. Thanks, everyone.